today's episode, we're going to focus on the golden Bitcoin chart just to better understand where we are at in the cycle, what to expect going forward, basing this on the historical tendencies of 2017, 2021, and 2025. So let's dive right into it. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive into it. But before we dive into it, a quick message from our sponsor. Our sponsor for today's episode is BitUnix, and they are a really great crypto exchange for you to consider for your daily crypto trading and investing. They are a no KYC, no VPN futures exchange, and their liquidity is on par with the top exchanges. Users can trade over 250 pairs with up to 125x leverage without restriction. And to celebrate our partnership, we're running a very special offer. From January 21st until February 21st, you can sign up using my link and deposit $50 and get $10 back, and share up to $10,000 worth of Trump tokens when you trade on BitUnix. Deposit reward will be distributed on every Monday and Thursday, and Trump trading rewards will be distributed after the campaign ends. The clock is ticking, the countdown timer is underway, and for more information, check out the link in the description down below. Thank you very much, BitUnix, for sponsoring this episode. Let's dive right into it. Let's talk about the segmentation of parabolic upside phases in each of these cycles. You can see that every time we break into price discovery, we tend to see diminishing rate of return and reward, and so we need to account for that also in this cycle. But each parabolic phase in the cycle starts off, first of all, after the blue vertical reference point. That is the halving, the fundamental shift in the Bitcoin protocol. After the halving, we tend to see breaking out into the parabolic phase of the cycle. That's occurred in every cycle. So really important to understand that post-halving, we tend to see exponential gains in Bitcoin's price action. And that starts off with breaking to new all-time highs. So breaking the old final major monthly resistance and breaking into new all-time highs into the parabolic phase of the cycle. That's essentially when it starts. So you can see here, also breaking old all-time high resistance, going into the parabolic phase of the cycle. The same thing can be applied right over here. Old all-time highs breaking. Here we were resisting for a long time, prompting this reaccumulation structure before transitioning into the parabolic phase of the cycle. So these green boxes represent that parabolic phase. And these orange circles showcase roughly where we are at relative to historical tendencies across cycles based on the amount of time we're in these price discovery phases. So this is the third month of price discovery. We're going to be entering the fourth month, and if we look at the third and fourth month, then we're approximately around here. So this orange circle, based on 2021 standards, just showcases that we're somewhere around here, and we're probably going to be somewhere around here as well going forward. So by standards of 2017, we still have a bit of upside, maybe even a bit of downside shortly after, going into March or April, and the same consensus can be attained from 2021 as well, whereby March and April we could be seeing a pullback. 2017 showed us that maybe we get a dip, a short-lived dip, whereas 2021 showed us that we can actually have a very deep corrective period. But nonetheless, after we see whether it's a pullback, a short one, or a deeper correction, what comes afterwards is still upside. 2017 shows us that, and so does 2021. So we are on the cusp of a breakout into additional price discovery and riding to new all-time highs, but obviously there's going to be a corrective period afterwards. So a breakout, some sort of a pullback, and then another breakout afterwards. That seems to be on the cards for Bitcoin. But what I want to talk about is this golden Bitcoin chart, because when we talk about bear market bottoms, we tend to bottom before the halving, 550 days. And then what's interesting about this is that we can copy-paste, essentially, this period, and then we get in very close proximity a bull market peak afterwards. And you can see that 500 days, roughly speaking, 518 days after halving is where we topped in 2017. So a difference of 1 month. But you can see how 518 days recurs also here in this cycle. 518 days before the halving is where we bear market bottom. And then 550 days, roughly speaking, is where we bull market top. So it's interesting how we get that copy-paste scenario, really. Same thing here, 517 days before the halving, we bear market top. You can see right over here that downside wick into the bear market bottom. And then we see that probably history is going to repeat itself with a 518-day period after the halving topping out, or maybe even a month extra for 548 days. And if you see, we get 550 days before the halving in terms of a bear market bottom, then we get a 518-day period after the halving where we bull market top. And conversely, if we get 580 days before the halving for a bear market top, 550 days for a bull market top after the halving. So in that regard, it's this cycle here from essentially 2018 to 2021 that's repeating here. So if we see that recur, then 2017, or at least the top could occur in September or October 2025 going forward. So based on that, seeing as we're some 300 days into the parabolic phase of the cycle already, then we have still a decent amount of time left. So 250 days, that's still a lot of time. But that's the maximum, I think. 250 days from this moment going forward, that's the maximum I think we would be rallying to search for that final bull market top for Bitcoin. And that's really important because time is going to slowly start becoming a bit more precious as we transition into the final stages of the bull market cycle, but also some of the more craziest stages of the bull market cycle as well. So we have to keep in mind that after this corrective phase, and let's maybe measure from the downside wick to the upside wick in that bull market top, after that corrective phase that lays ahead in the future, we have to understand that there is going to be a reduced rate of return going forward. And that's probably going to be the case also in this cycle. Once we've rallied and then pulled back, then we have to taper those expectations a little bit more, simply because of diminishing returns. And when it comes to those diminishing returns, they can be quite substantial. If we look at 2017, then you can see with 2021, approximately half of that, even more than half, is where we saw that reduction. So if we see that sort of 50% reduction still, that'll get us to this point. But even then, that's still some decent upside potential going forward. If we were to reduce that a little bit more, then still there's a bit of upside left to go. But we have to understand that we have come from 15,500. And if we're thinking about where we go in this bull cycle, then obviously the risk to reward is slightly changed, because obviously this is the greatest risk to reward ratio, and we've already rallied a tremendous amount. So the remaining that we might have in terms of upside is just this much. So if you've been here since the bear market bottom, that's fantastic, because that's been a fantastically captured move. But now that rate of return has reduced, and it's still a decent reward going forward, but that reward, as time goes on, especially over the next 250 days maximum, over the next 250 days maximum, the maximum we could see is a bit more upside going forward, whether that's 50%, up to 50%. Once we've rallied some 10, 20, 30%, that's going to continue to shrink. And as we progress in that cycle, this is also going to continue to shrink. So you're really fighting for limited reward and exposing yourself to a lot of risk towards the downside, because after every bull market peak, we tend to see quite a bit of downside over a period of a year. And you can see here that that downside has been deep in the past. So if we were to measure this bear market bottom here, that's quite a deep retracement. But we've been talking a lot about diminishing returns in terms of upside, but there's also shallower bear market retracements. And you can clearly see that as well here as we measure these bear market bottoms and retracements. But what's interesting is that even though we're getting shallower pullbacks in terms of bear market retracements, then depending where we top out, we're probably going to see another a much shallower base on the previous cycles, right? It's going to be a shallower bear market. And if you're looking at, for example, these old all-time highs here, we deviated below those old all-time highs. So could we see the same thing happen here, right? So let's remember this range here, because if we calculate that sort of retracement, let's say from here, and then it's a little bit shallower, could that get us into that period to deviate below old all-time highs? Maybe we go even a little bit lower to just really scare people and capitulate the holders before we reverse into a new cycle. So really interesting. This really is the golden Bitcoin sheet going forward, the really golden Bitcoin chart going forward. And we've looked at shallower pullbacks on bear market retracements, but what's really interesting about these pullbacks and bear market retracements is that they tend to last a very similar amount. Just look here. Very similar amount from bull market top to bear market top, bottom rather. It's a very similar amount of time. And it's that way for a reason, because we tend to see bear markets last 365 days to 395 days. So in terms of retracement, anything from 60% to 80% could be a retracement. Obviously, the deeper we go, the lesser the probability of that pullback really happening that deep, because here maybe we've had an 84.5% pullback, here also an average 84.5% pullback, roughly speaking. Here we had 75% pullback. So maybe if we get a 70% pullback again here, over a period of 395 days or 365 days, then we're going to get closer to bear market bottom. But we're talking about the next phase in the cycle. We still have a bit more upside still to go over a maximum period of 250 days going forward. And we really need to be cautious about profit taking and not try to squeeze too much out of this market, because at some point the reward is this much. Actually, at the moment it's this much probably. This is still the reward that you can capture. Bear market bottom buyers have captured this reward, although if they haven't realized those profits, they haven't captured anything yet. So really important to realize those profits while you can. But this is probably the remaining upside we have left. That's the potential reward you could still capture. But at the same time, once we rally to this point, the potential risk is that 365 to 395 day bear market retracement that could be 70 to 80, maybe 65% deep. That would bring us probably to old all-time highs and just below it. So having said that, that's about it for today's video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoyed this gold and Bitcoin chart video, and like if you'd like to see more videos like this going forward. I'm Rex Capital, and I'll speak to you in the next one. Speak to you soon.